What's up, good people? How you doing? Welcome back to Stock with Larry Jones. Listen, keep doing it, good people. Just keep doing it. Hit that like, subscribe, and notification bell. You've been rolling with me. Hit the like button. Let's get into it. First, don't fall for any spam. I will never talk about a WhatsApp. I ask you to send money or crypto anywhere. It's spam. Never fall for it. And anything I say is not a suggestion for you to buy, hold, or sell a stock. We're just discussing this, right? But if you've been following me for a while, we're the family of all ages and all races, and we've been making good money, and we were prepared for where we are today. Make sure you check out the links below. Listen, let's get into some of the headlines. I got some notes here that I was taking that I thought you guys would be interested in discussing. So I believe, well, we're here where this will be the worst January ever in the stock market. And if you're listening to me, most of you, I see how old most of you are. This is the worst January, period, of your trading and your investing. It just is, all right? But a lot of people are posting stuff. You're going to see stuff like this. This came up today. Top Wall Street analysts see safety in these stock. You know what? Let's just take a minute and see what stock they're talking about, right? Let's do that. So they're talking about Spotify. They're talking about Facebook, which is Meta Platforms. They're talking about Uber, UBER, ticker symbol. And they're talking about Hotspot, which is Hubs, HUBS, ServiceNow. And that's it. You guys go ahead and Google this. I haven't read it. Do your own due diligence on this. I don't just roll with anything, but we try to see what's going on with it, all right? So I just wanted to let you guys know that. So now let's go into what else we want to talk about. Now, I want to tell you that some people think that we're out of the woods. I don't think so yet. I think that we have volatility for the next 3 months, right? And I believe that the 4th of July will mark, the 4th of July will be, our liberation from this bear market, right? That's what I believe. It could be Liberation Day for this bear market. But what you have to do is see the opportunity to invest from now until then. These are some of the things that I believe in, okay? A lot of people think that this is the bottom. It's not. But we don't know. It could be near the bottom. So that's why I suggest start dollar cost averaging in. We have a green light to start dollar cost averaging in, all right? And so if you've been following me, you've been doing good by holding your cash and just a little bit. Now I say it's safe. And I'm saying it's safe to start DCAing over the next 3 months. I want to be clear on that. You're going to have plenty of opportunities. You got some stock that are running green today, Tesla and what have you. But I still say that you will probably have an opportunity to buy Tesla, maybe 800. I believe it'll come as low as the 750s. And so if it doesn't, the safe thing to do is to start dollar cost averaging in, right? Here's one of the things that I took down I want you guys to know about. So remember, last year in December, the last of December, a lot of people did what's called tax loss harvesting, meaning they intentionally took a tax loss, all right? I did it myself. And you sell some of the stock that you're red in, right? But you hold it for over 30 days. Not 30 days, but over 30 days. So if you hold it for 31 days, which today is the 31st, and just to be clear, because you don't want to cut it short, it should be over 30 days. Now you can get back in and invest in that same stock. I believe a lot of that is happening. I don't think a lot of people are going to be talking about that, but that's one of the things I see. If you look at where stock was, there was a lot of these plays that are up now. A lot of people were taking losses then, okay? And you do your tax loss harvesting, you have to wait 30 over 30 days because you won't get a wash sale if you do that, okay? And so I believe that that has something to do with the markets being green today. You know, and you're going to see a lot of things like Omicron cases starting to fall. Remember, I said by the end of March we'll be through this. You, me, just about everybody we know will have it. The quicker we get it, the better. It's these variants are getting less strong. That's going to be another positive thing. Now, the reason why I see 3 months minimum, okay, I think by July we'll be out of the biggest volatility, and the market is not just going to V-shape up. It's just going to take a while for it to get back up. That's why I believe personally that by the end of summer, the beginning of fall-ish will be good. So that's why plays like Netflix is doing good. And more importantly, plays like Disney is doing good. Let me tell you guys why I bought Disney when Netflix went down. When Netflix went down, we have to understand that Netflix is a streaming service, and that's all they do. That's their revenue, right? It also took Disney down and other streaming platforms. So I started investing in Disney. For those of you that's been following me, I told you guys I did a call option. I did a June and now a July call option on Disney, meaning I'm expecting it to be up by then. These are some of the, Disney is one of the reopening stock, okay? Meaning it's going to get beat down now, but when the summer hits, the parks open up. And you say, well, why didn't you just buy some Netflix? I did buy some Netflix. I only bought a little of Netflix. I bought a lot of Disney because Disney is not just a streaming platform. Disney don't just stream movies. Disney has cruise ships out there, which is another reopening play. Disney is into sports. Disney owns ABC. Disney has amusement parks. Disney has Disney Plus. Disney is getting into the metaverse. Disney has all of these things going on and not just streaming like Netflix. Disney got took down, guilt by association. Okay, so that's why I believe Disney is a good play. And if you don't have Disney on your books, you should start DCAing into Disney. That's what I remember. Anything I say is not a suggestion for you buy, hold, or sell, but it's one of the plays that I want you to start looking at. All right, if you don't have it on your books. Disney is one of the companies that is going to make revenue year over year over year, right? And there will be some down years, but over a 10-year period, you're going to be glad you took Disney. But I want to talk about positive things that will happen to help the market go back up after the bear market. Tax loss harvesting, we're going to start to see that, right? When the tax return checks come, I believe that we will probably have more, even in this bear market. This is what I believe. I believe that we will have more tax money coming into the market in this year than probably ever. I believe people will take their tax return checks because a lot of people have seen these run-ups and run-downs. I believe that a lot of that money is going into stocks and crypto, especially crypto. That's what I see. So that's a good thing for both markets. If the Fed, now they're talking about as many as 5 rate hikes, if inflation starts to flatten, which I believe it will by the end of summer, I believe inflation will just flatten. That doesn't mean it's going to come down. That means it's going to taper, start to flatten. Then the Feds will be able to ease up because them raising interest rate, they're trying to get it to flatten and then come down. So if it's successful, they don't have to go as aggressive. And then that will be positive for the stock market at the end of summer, beginning of spring-ish. All right. So those are the things that I see, good people. I wanted to put you up on these plays, and I want to make sure I got everything. This week more green days than red, maybe. And but don't let it fool you. You got all of this. I talked about the tax loss and everything like that. Here's what I'm going to do for everybody that's taking the Larry Jones $5 a day challenge. As you know, I only have 5 in there, but I've been still saving $5 a day. I hope you guys have money in your portfolios. So I'm not going to put in while the market is up. The next red day we have, the next day that the Dow goes down 300 to 600 points. I'm going to take from January 1st up until now, that's when I'm going to put that $135 per stock into the $5 a day challenge. And I'm going to buy it when it's red and not green. We're going to keep the principles that working. All right, good people? And we're going to make money. All right. Hey, let me know what you think about my thesis. Let me know what you think about the tax loss harvesting, inflation, interest rate hikes, any of that. Let me know if you agree with this, or has this put something on your mind where you just went, Now, what I want to ask you on Monday, this is Mic Check Monday. Mic Check Monday. Mic Check Monday. Check. Is this thing on? I want to ask you to share this with your family, because now is the time they should be investing. Yes, they don't know anything. I want everybody listening to under the sound of my voice right now to talk to your entire family just about what you know. It doesn't matter how limited what you know. Let them know what you know about the stock market and have them to start to study right now. They can follow my $5 a day challenge. Make sure they open up broker accounts. I suggest you opening them up 2 to 3 right at the start. I used Fidelity as a broker, as a legacy broker. So I do my $5 a day there. I do my swing trades in Webull. You guys check out the Webull link. I got a link for it down there. Deposit $1 and you're going to get 3 stock worth up to $3,300. And then for crypto, we want to download the Coinbase app. I have a link for that below. They're going to give you some free Bitcoin by watching some videos. Okay. Then just have them come to my page, hand them the phone, go to my page and say, here, subscribe to this. It's that easy, because you're going to be surprised that your nieces, your nephews, your sons, your daughters, they're going to pick the stuff up better than you are. And for those of you that are male, which we are 80% male that are watching this, I want you to involve your wives and your girlfriends, okay? So let's make this money, because at the end of the day, I'm going to play some shocking videos at the end of this. And it's going to explain why I want everybody to do this, because the wealthy are getting wealthier, while the poor are getting poorer, and the middle class is shrinking. Somebody's going to get this wealth. It needs to be us. The only way we can make that happen is to continue to spread this word. And even if you don't have them subscribe to this page, share this information. Somebody needs to get this money, and it does not need to be the 1%. All right, good people. I love each and every one of you guys, and that is true. Take it or not, I do. All right. I'll see you guys tomorrow. Live, love, laugh, and learn. Peace. Love you guys.
Report reveals the world's nearly 3,000 billionaires increased their wealth by $5 trillion last year, a rate unprecedented in human history, which prompts Mark Whitaker to ask, when is more than enough enough?
Finds that the world's 10 richest men more than doubled their fortunes during the first 2 years of the pandemic, while income levels for the 99% of people around the globe actually fell. The wealth gap has reached stratospheric levels. The richest 1% of Americans now has almost 13 times the wealth of the bottom 50%. It's led some to consider maybe you can be too rich.